Hello, good evening, good afternoon, and welcome. Welcome to your session, 89th session on GST. Today again, we are not having a tech session. We have little lengthy topics to be covered and love to see you all again. With me today, the presentation would be done by our colleagues Ashika, Jagadeesh, and Hitesh. What's important for today's discussion? We have 2 points. One, invoice management system, IMS, which has been in operational quite a while. I'm still seeing a lot of people are struggling in understanding some concepts because unlike your GSTR1, GSTR3B, which is on a monthly basis, IMS is not something that comes month over month. IMS is more like a one-time activity, and it will be a post box where some records would be coming into it and going out of it. So you cannot never have a situation where let us look at IMS for the month of this. That itself is a wrong notion. We've been trying to drive that concept and get it clear how you build your reconciliation system. We are on 29th March, fag end of the year. However, there are a lot of decisions that are taken for the financial payments, and we are also at the verge of fulfilling section 128A on voluntarily paying off some liabilities. At the end, I would request Ashika to give a note on that aspect. But what is more importantly is looking at full year and seeing that if something that is mistaken, something is not done, can I do something and close it so that I don't feel the brunt of the officers? That is where we are looking in the today's session. Yeah, we would start with the IMS and request Jagadeesh. Ashika will be starting with IMS, right?
Yes, sir.
Yeah. So I would request Jagadeesh to start the session, and I'm here throughout the session. Wherever required, I would pitch in. But over to you, Jagadeesh.
Thank you, sir.
And participants, feel free to put your questions in the chat. In the interest of everyone, so all of you have been muted. In case you want to ask a question, you can raise the Zoom virtual hand. When you raise it like this, we might not notice, but in the Zoom, you have an yellow hand button. Click on that. We will unmute you and we will take the questions at an appropriate time. You are here to learn something. Please ask as many questions as you have and have it fully complete before you leave the session. Yes, Jagdish, over to you.
Okay, sir. Let me share my screen.
Yeah.
Yes. Hope my screen is visible to you all. Yes.
Yes.
Yes. So the first part of session will be on IMS. In today's session, the focus would be more on the practical thing. We'll take up the practical examples at the end. First, we'll understand what IMS is, and then we'll see the IMS workflow, how it works, and why they have introduced IMS now after 6 years of GST implementation, almost 7 years completing. And we'll also see the how IMS interface in the GST portal, and then we'll take the examples, practical examples, and then at the end we'll discuss on the FAQs which was relayed by the CBIC from the time to time. So now first we'll understand what is IMS. IMS, we all know, it was introduced a long back, that is on the 1st October 2024. So if you see the IMS is a communication mechanism between the recipient and the supplier. Earlier, at the time of implementation of GST, there is a concept of matching concept of invoices. Uh, there are so-called returns of GSTR2, GSTR3, but somehow they have not take off. And after that, in the middle of 2018-19, they have came up with the new returns, Annexure 1, Annexure 2, but somehow the GSTN has felt that the current return filing system is working properly. So that's the reason they have not implemented those revised returns also. That's Annexure 1 and Annexure 2. But now somehow they have felt that there is a gap in ITC matching and the data reconciliation. So that's the reason they have now introduced the IMS, Invoice Management System. This provides the additional layer of document verification and reconciliation for both the supplier and the recipient. So the main object of IMS is to reduce the errors and improve reconciliation. Till date, if you ask any taxpayer whether you have taken ITC on particular invoice, he cannot confidently say that I have taken ITC on this invoice. So that's the reason with the implementation of IMS, there is a sure answer for the taxpayer whether he has taken ITC on that invoice or not. So this enables the taxpayer to verify the authenticity and genuineness of the received invoices. So when the documents, that is invoices, will reflect in the IMS. So as you all know that in case of e-invoicing, uh, invoices will directly move on to the supplier GSTR1 and will get saved after T plus 2 days. Actually, initially it is taking 2 days of time, but now within few hours it is going to the supplier GSTR1 and saving it in his one. So as and when the record gets saved in the supplier GSTR1, the moment it will get reflect in the recipient IMS portal. So in what way this IMS help? IMS helps you to avoid mistakes and take the appropriate actions in prior and ensures you're claiming the correct input tax credit. This is the background of the IMS. So whether there is any legal backing for this IMS, actually this was introduced in the 1st October 2024, but actually practically got implemented from the 14th November 2024. So, in the 55th GST Council has recommended to amend certain provisions in the GST law. Following the pursuant to that council recommendation in the finance bill also, if you see the recent finance bill 2025, they have proposed the amendments in the section 38, 34, and section 39. First, we'll see what are all these sections. If you go to the section 34, which talks about the credit note, so to adjust the liability on the credit note, supplier has to report that in his monthly return, and the recipient is supposed to reverse the input tax credit attributable to that credit note. But now with the proposed amendment, what they have made is they have now it's a mandatory requirement for the recipient to reverse that input tax credit. Earlier, there is no mandatory requirement that recipient is required to reverse that input tax rate. Now it is now made mandatory. Further to that, any rejection of credit note IMS by the recipient, liability of the vendor get increased. So what taxpayers are doing now, they are using this loophole. They are reducing their liability by issuing the credit note, but the recipient is not reducing the liability. Because of this, there is a huge loss to the revenue. So that's the reason they have made this proposed this amendment. And also the time limit of 1 month is expected to be given for accepting or rejecting a credit note. That is also as of now in the current IMS portal, there is no option for the pending. Either you have to accept it, reject it. So simultaneously, they have also proposed to introduce the new rule, which is Rule 67B, which is expected to give legal enforcement to addition of liability in case of rejection of the credit note. So they also, the same rule, they may also insert the provisions with respect to the interest also that we'll see. And also coming to the next section, section 38. So in the section 38, if you see the inward input register, that is the GST 2B, is referred as an auto-generated. But now the auto-generated statement uh, is now amended to just statement that auto generator has removed. That why that auto generator is removed with the introduction of IMS. 2B is no longer a static report. It is a regenerative statement based upon the actions you taken by the recipient in the IMS portal. Based on that, your 2B will get generated. As long as you take actions on the IMS, your 2B will get regenerated. So that's the reason they have removed the auto-generated wording from the section 38. And also, they have also proposed amendment in the Rule 60, which specify the format and manner of the 2B generation. That is how the 2B generating now based upon your actions in your IMS. So these are just a proposed amendments, not an effective. So in any legislations, first they will frame act and then rules, and then they build a system. But in GST, first they will implement it, and later they will frame act rules to match with the system. So this is happening since from the implementation of GST. Uh, Sir, would you like to add anything here, sir? Okay. Um,
Yes, sir, is coming.
Yeah, okay, okay, then I'm continuing it. Just a second. Yes. So now this
Sorry,
is all
Jagadeesh.
about, yes, sir. Yes. Uh, Before moving forward, first we'll understand how the current return filing system works. As and when the supplier files the GSTR1, let's say on or before the 11th of the subsequent month, all those invoices will move to GSTR 2B. From 2B, it will reflect in the 3B. This is how the current return filing system works before the introduction of the IMS. Now, in between this GSTR 1 and the GSTR 2B, now the IMS, Invoice Management System, has implemented. So now we'll see how this IMS is impacting the existing return filing system. So this is how the current IMS flow is. We'll see the each part wise. As and when the supplier generate the e-invoice, in case of e-invoice, it will go to the GSTR1 after T plus 2 days, the transaction date plus 2 days, or else if he, as and when he saved the record invoice in his GSTR1, the moment it's saved, it will reflect in the recipient, respective recipient IMS portal. So in the IMS portal, the recipient has an four options to act upon the record. Either he can accept it or reject it, or if he wants, he can keep it pending, or he can also not to take any action on that record. So we'll see what happened for each of the action. If I accept it, it will go to my GSTR 2B. If I take no action also, it is deemed to be accepted. In that case also, it will flow to my GSTR 2B. So if I reject it, it will flow to the GSTR 2B, but as an ineligible record, it will go and sit in the 2B as an ineligible. That is a rejected section, it will go and sit. If I keep it pending, it will remains in my IMS portal as long as I take action on that IMS. If I reject it, uh, if I take any of the above three actions, it will move out of my IMS. Only the record on which I have marked as pending, only that records will lie in my IMS as long as I take an action. So if you see here, the draft GST to be. So based upon the actions taken by you as a recipient, your draft GST to be will be generated on the 14th. Yes, you have heard it right. It's a draft GST to be, because if you have take any action post to the generation of your to be, so again your to be will get regenerate with the updated actions. So just before we discussed that, now the 2B is no longer a static. Now it's a regenerative statement. So if you have taken any action from 14 after generation of 2B, you have to click recompute 2B to get the updated 2B based upon your actions in IMS. So from 2B, your records will flow to the 3B. So if you see here whether all invoices which the supplier is issuing on the recipient, whether all invoices will flow to the IMS, the answer is no. There are some records, invoices which will not flow to the IMS. Now we'll see what are all the document types which will not flow to the IMS. RCM documents. That is, if your supplier has issued invoice by marking invoice type RCM as S, in that case, it will not flow to your IMS. It will go directly to your GSTF to be as an RCM invoice. And also ineligible ITC. Ineligible ITC means ineligible ITC under section 16.4 or the different place of supply. As we all know that as per section 16 subsection 4, the time limit to avail ITC is 30th November of the subsequent year. Let's take an example. If now in the month of March, if I receive any invoice having the date of March 2024, on that invoice, I supposed to take the ITC on or before 30th November 2024, right? But now I am receiving that invoice, which is ineligible. I cannot take ITC on that invoice. So that invoice, system itself will recognize as an ineligible, will not pass on to the IMS. It will mark as an ineligible and will go to the GST to be as an ineligible document only. And also the place of supply. Let's say I am having the registration in Karnataka, but I went to some Maharashtra and stayed there. The hotel bill they have given the place of supply as a Maharashtra. In that case also, if you have a different place of supply, you cannot take the ITC on that. In that case also, the records having the place of supply other than the recipient registration, in that case also, those documents will mark as an ineligible and will float to your 2B as an ineligible documents. If you see here, the credit note rejected will become liability of the next month. This also in the section 34, we have seen that in case if your recipient, if you have write the credit note and reduced your liability, but what your recipient did, he has not reversed his liability. He has rejected the document. In that case, that liability will get added to the supplier 3B in the subsequent month because there is a loss to the revenue. Here the supplier is reducing the liability, but your recipient is not reversing the ITC. He is supposed to do, but he is not doing. So that's the reason. Now I am in the subsequent month, it will get added to your GST 3B. This we will discuss in detail in the later slides with the example. This is how the IMS works.
So let's go to the previous slide here. Any questions to anyone, please put it in the chat. If you want to discuss, you can raise your hand. I've seen two questions. One, Rajesh Mangal sir, where he's saying the credit note is rejected by the customer for Jan 25. It's automatically getting added in February 3B liability. Now, Rajesh sir, so this can, in fact, when the IMS has been thoughtful, they have strictly made it a policy saying that the credit note cannot be kept in a pending status. Imagine a situation where supplier is reducing his liability, not paying the taxes. On the other side, the recipient is not willing to reduce the input tax credit. Like if recipient is also reducing input tax credit, it makes sense. But recipient doesn't want to reduce input tax credit while the supplier is reducing the liability. It is not a favorable scenario where the government is envisaging the credit note as. And that is where the amendment has been made in the law to make sure that this is taken care. And where they said it is credit would be flowing through 2B and 2B values are coming through IMS. Otherwise, the auto-populated value of the 2B, if the original statement was retained in section 16.2 and 38, the original auto-populated value of the 2B will then be favorable. So they made that correction. That's point number one. Point number 2, you also mentioned that if we are making any action as pending, then 4FI is automatically reduced. So how to show temporary reversal? Here there are 2 points I want to talk about the temporary reversal. Let's say a supplier has raised an invoice for 1 lakh plus 18,000 rupees, and I am eligible to take a credit of 18,000 rupees. While reporting in his GSTR1, he has reported by erroneously as 10,000 and 1,800. There's a zero that got missed. What will I do? I would reject that record so that he can correct it back. Even if I keep it pending, the supplier can correct it back. If I accept it, then he would be forced to issue a debit note accordingly, or cancel the original invoice and issue a new invoice accordingly. So the new changes that would happen. Now you may ask the question, where is this question? How do we take a scenario of pending versus 4B2, a temporary reversal? We all know the total credit comes is recorded as 4A5. Any credit that you think that you are ineligible, you will report it in 4B1. Any credit that you think you are eligible, but temporarily right now you are not eligible, you have not met fully conditions, so you will park it into 4B2. Now, any credit that is parked into 4B2 is tracked in electronic credit reversal reclaim statement. It's not that the credit is lost, but it is there in electronic credit reversal and reclaim statement. But whatever you are marking as pending, it is going to be in your IMS only. Now, what is the difference between 4B2 versus the record pending in IMS? Any record that is pending in IMS will be subjected to 16 subsection 4 time limit. So the records would automatically move out of IMS after the timeline expires. For the financial year 24-25, if you have any record in the IMS still not accepted as on 30th November, it will automatically move out from your credit and it would get packed into 4D2, saying that this is you are no longer eligible. So certain ineligible documents will automatically move out. In fact, one of the ineligible document which Jagadeesh mentioned is where the place of supply is not the location of recipient. It would get out of it. Likewise, the time expired documents would go out of it. So if you think that your invoice is right, but you are temporarily not wanting to take the credit, you can accept it and mark it into 4B2. Yeah. So hope this answers the question. Please continue.
Yes. So now we'll see what happens to your input tax credit based on the based upon the recipient's action in the IMS portal. So if we accept it, it will be part of GST 2B in the ITC available section. And in the 3B automatically from 2B it will flow to your 3B as an eligible ITC. So if the recipient rejected, then it will be part of your 2B, but in the rejected section. The same way in the 3B it will not flow to your GST 3B of the recipient. If we mark pending, then it will not be part of the 2B other month. It will remain in the IMS dashboard till accepted or rejected in the future, subject to the time limit under section 16 subsection 4. So anyway, if we mark it as a pending, it will be in IMS and it will not flow to the my GSTR 3B. If no action has taken, it is as good as accepted. So if you have not taken any action, means it is deemed to be accepted as an eligible ITC. It will flow to my GSTR 3B and will sit go and sit in my 3B as an eligible ITC. This is how your invoices will act based upon your actions in the IMS portal. Now we'll see in the GST portal, if you see, there are two views. One is for the recipient and another for the supplier. For recipient, just we discussed that to take the action upon the invoices which was issued by the supplier. Whereas for the supplier, so to see what actions his recipient has taken, whether they have accepted it, rejected it, or marked it as pending. For that reason, they have given view for the supplier also. In what way the outward supplies helps for the supplier? Because if he reject it, he wants to know the reason why he has rejected it, whether there is any deficiency in the service, whether the goods have not reached uh, to to the recipient. So to check that, uh, that outward supply view has given for the supplier also. But as of now, this is not functional. Only the inward supplies view is working now in the portal. So moving on to the further, we'll take example. Let me share my Excel instead of explain here. We'll share the Excel. So now we'll see. Is my Excel is visible or still the PPT is
Excel is visible, Jagadish.
Yes, sir. Yes, yes. So now we'll see the impact on the input tax credit and on the supplier liability on the different scenarios. First, we'll see this part is for the recipient and this part is for the supplier. So let's see the first case. If the supplier has issued invoice, let's say having the GST liability of the 100 rupees and the recipient accept it, okay, this 100 rupees will part of his GST or 2B. So here he raising the invoice with the liability of 100. He is accepting it. It will be added to the to his 2B. So if he reject it, then it will not form part of his 2B. The same case with the pending also, as long as he take the action on that. So here there is no impact on the supplier side, irrespective of the actions taken by the recipient. It's a plain vanilla case. Now we'll see the second case, second issue. The supplier is amending his invoice upward. Let's say initially the invoice was 100. Here, if I am saying any figure, it means the liability and the input tax credit, not the taxable value. So if initially the supplier invoice value is 100, later it got amended to the 110. So what the recipient is in the first case, my original invoice, he accepted it. As in when he accepted it, 100 rupees will form part of his 2B. And if he rejected, it will not form part of his 2B. This is the previous case. Now, if he accept initial invoice and later if we also accept the amendment also, and in that period, the 10 rupees will add to his 2B. So total, he will have an ITC of the 110 rupees. Similar the case with reject pending also. In that case, he will not get any ITC. And again, initially, the 100 rupees invoice was not accepted by my recipient. But now, after amending it to the 110 rupees, he is accepting now. Now, the whole 110 rupees will form part of his 2B. Whereas in the previous case, first 100 form 100 created and later the 10 rupees created. But in this case, the whole 110 rupees will get form part of his 2B. And in case of reject anyway, the original invoice also he has not accepted, and later the amended invoice also not accepted. So he will not get any ITC here. So this next case, initially he had marked it as an pending 100 rupees, and later after amending it to 110, he accepted the 110 whole. So in that period, he will get the whole input tax credit. If he reject it, anyway, the original invoice also he has not accepted, and the letter after amendment also is not accepted, he will not get any ITC. So this is the upward amendment. Now we'll see the downward amendment. So initially my invoice value is 100 and later I changed it to the 80 rupees. Let's see the first case. Initially the original invoice he has accepted it. That is for the 100. Later I amending it to the 80. As in when he accepts this amendment also, his ITC will get reduced by the 20 rupees. Initially 100 he accepted and later amendment also he accepted. So 20 is reducing from his input tax credit. Okay, clear. Now see carefully. Initially, he has accepted 100 rupees, but later he has rejected my amendment. I reduced my liability. I'm a supplier. I'm reducing my liability from 100 to 80 by issuing the credit note, but my recipient is not reversing the credit note here. So what happens here? If we reject it, automatically that reducer liability will form part of the supplier liability. That is, it will be added as a liability to me in the subsequent period. If you see here, incremental liability on action taken, here he is rejecting my amendment, that is downward amendment. So here it is adding to my liability. So anyway, in case of downward amendment of invoice or a debit note, pending action will not be allowed. Either you have to accept it, reject it. And coming to the next case, initially my 100 rupees invoice not accepted by my recipient, and later I have reduced, I have amended it to the 80. That time he has accepted it. So, okay, that 80 will form part of his ITC. Now he is rejecting even now also. First rejected, later also rejected, no issue. First accepted, subsequently accepted, okay, no issue. First accepted, later rejected, then it will be a problem to the supplier. Okay. In case of pending issue, similar, it's a easy thing. Initially, he has not accepted. Later, he has accepted the amended. So what I am doing in my GST R1, in place of 100, I am changing it to the 80. So that 80 now he is accepting it. Obviously, the 80 will be the ITC of my recipient. So in case of reject pending, he will not get ITC anyway. Hope it is clear the invoice part, upward amendment and downward amendment. If you have any doubts, you can put your questions in the chat box. Yes, I will go to the credit note next part. With supplier rate, debit note, there are a lot of questions. Okay, we'll do one thing. I will complete the credit note part also, because some of the questions are related to the credit note thing also. So after discussing all the issues, and then we'll take up the questions. So now coming to the credit note, the invoice is completed. Upward amendment and downward amendment completed. Now we'll go to the credit note part. As we already discussed in the workflow of the IMS, that for the credit note, there will be only two options. Either you accept it or reject it. But you cannot kept it as a pending. You don't have an option to mark the document as a pending. Either you have to accept it or reject it. The logic also I will explain why they have not allowed the marked it as pending in the end. At the end of this slide. So initially, I have issued the credit note to my recipient for the 100 rupees. Okay, he has accepted it. Obviously, his input tax credit will get reduced by the 100 rupees. And after that, it's a okay. The loop get closed over there. Now, again, coming to the next part, here I am issuing a credit note for 100 rupees, but what my recipient is supposed to do, he has to reduce his input tax credit. But what he is doing, he rejecting it. What happens here? There is a loss to the revenue. I am by issuing a credit note, I am reducing my liability, but my recipient is not reducing his liability, input tax credit. So in this case, if my recipient is rejected, then obviously this amount, 100 rupees, what I have adjusted by issuing the credit note will add it to my GST 3B in the subsequent period. Okay, let's say if I issue the credit note in the month of the Feb, and he is rejected in the same rejected in the Feb, it will be added to my GST 3B in the month of the March. This is about the credit note. So hope it is clear up to the credit note part. Now we'll see the credit note upward amendment. Initially, the credit note value is 100 rupees, and later I increased it to 120 rupees. So I am reducing my liability as a supplier. I am reducing my liability by 120 rupees. Okay. So initially, my recipient has accepted it. His input tax rate reduced by the 100, and later also he accepted it. So total 120 rupees he reduced it. My liability got reduced, and also his input tax rate also reduced by the 120 rupees. Okay, fine. But coming to the second issue, I'm issuing initially my recipient has accepted the 100 rupees credit note initially, but later for the 20 rupees additional credit note, I mean amended upward amended credit note, he has rejected it because here I am reducing 120, but he is reducing 100. What he is supposed to do? He has to reduce 120, but here he is rejecting it 20. So that 20 is will add back to my GST to be in the subsequent month. So again here for the upward amendment of the anyway for the credit note there will be no option to mark it as in pending. Okay. Hope it is clear. And now coming to the next option, I am issuing the credit note for 100 initially, which was rejected. Obviously, that 100 rupees will become my liability in the next period. Okay, there it's closed. Now again in the subsequent period, I'm amending it to the 120. In that case, if we accept it, okay, I'm reducing my liability 120, and he is also reducing 120. Accept. Okay, done. And coming to the next one, in the first case, I mean, in the on original invoice, he has rejected it. And on 120 also, he is rejecting it. In the first case, the 100 will add it to my liability, right? And then the second case also, that 120, as and when he reject it, it will be form part of my liability in the GST 3B. If you see here. So this is how just a second. Yes. Anyway, in the credit note upward also, pending option will not be allowed. So now coming to the credit note downward amendment. Initially, I have issued the credit note for 100. Later, I reduced it to the 80 rupees. That means my recipient is supposed to reduce his input tax rate by 80 rupees only. So the 100 rupees I have issued, he accepted it. So his input tax rate will reduce it by the 100. And later on, after amendment, it become 80, right? So if we accept it, plus 20 will be added to his input tax credit. That means initially he has reduced his input tax rate by 100. Now after amending it to the 80, plus 20 will be added to his input tax credit. So initially, yes, if you reject the amendment, what he did, I am reducing my liability by 80. What my recipient did, he reduced his input tax credit on original invoice by 100, but later he has to reduce only 80 rupees. But he is rejecting it. Nothing will happen to the supplier liability because anyway, it's a loss to the recipient, not to the supplier. Okay. Similar case with the pending also. So coming to the next one, on original credit note, he has rejected it. Okay, obviously it will form part of the liability of the supplier. That 100 rupees will add it to the supplier liability. But he reduced it to the 80. That 80 he accepted later, amended invoice, he accepted it. Obviously, that 80 will get reduced from his input tax credit. Okay. But if it reject original invoice rejected and also the amended invoice also rejected, in that case there is no impact for the recipient, but for the supplier again that 80 will get add back to his liability. Initially also 100 rupees is add back to his GST 3B, and again he has reduced his liability by 80. Again that 80 also my recipient has rejected, so that 80 will get added to the output tax liability. I mean, GST 3B liability. Again, here also the pending option is not allowed. So If you see, if you put the whole thing, it will be a little confusing for you all. But the simple logic here is there should be no loss to the revenue. If there is any loss to the revenue, they simply add a liability to the supplier. That's it. This is the simple logic behind this. So, sir, would you like to add anything here, sir?
Yes, Jagdish. So you have taken us through maze of complexities. At this point, I would request participants, if you have a question, you can unmute yourself and ask. But let me bring a couple of points to you. Firstly, if an invoice is rejected, like supplier has raised an invoice, I am supposed to take a credit, I rejected it. That means my credit is going down or credit is not coming. To the supplier, will his liability go down? Answer is no. He has to manually reduce if he wants to. It is not automatic. Let's say it is not invoice, it is credit note. In case of a credit note, supplier has issued a credit note, reduced his liability. I have rejected it. My ITC is not getting reduced while the supplier liability is getting added back into his account automatically. Now, I am saying this rejection is by mistake I have rejected. I have to accept it, but instead of accepting it, I made an error and rejected it. Now, what will supplier do? The record goes back to the supplier. He would go to the amendment table, table 9, both credit notes or the regular, we have amendments in 9A and 9B. He will enter the document, the records get auto-populated, he will submit it back again. He doesn't need to change. Earlier, we used to make a change of adding some 0.1 paise or changing some document number with ABC. Now, after the introduction of IMS, the GSTN system said, okay, how do we handle erroneous thing? Now, supplier has made an amendment. The moment the amendment is done, the record would automatically flow back to the recipient system. What would happen to the supplier? Amendment on the supplier system, only delta gets added. But supplier had liability of 10 or credit note of 10, he just opened and closed. So his liability is neither going to go up or go down. The credit note or invoice is coming back to the recipient is going to accept it. You may say that recipient has rejected erroneously second time also. If in the second time it is rejected, GSTN has no provision to amend a record more than once. Then you have to make good. You have to cancel the original document, issue a credit note or debit note suitably to alter the transaction. Yeah, hope this has clarified. And the scenarios which Sri Hari Rao and Rajesh sir has asked, hope those are also clarified. If you think that your scenario is still not answered and clarified, you may unmute yourself and ask, or you can put it in the chat.
Venu sir, good evening. Please repeat if the recipient second time rejected the credit note.
So if the recipient has rejected the credit note second time, and is it genuine or erroneously rejected?
Erroneously rejected.
Yeah, so that means the recipient is supposed to, which means recipient is supposed to accept the credit note and reduce the liability, and the supplier's reduction is also genuine.
Correct.
Now, the rejection has come back to the recipient, to the supplier and added as a liability, as added back. He reduced the liability and it has added back. Now, the moment it is added back, now I cannot issue the amendment to it. Supplier will issue the credit note again. See, the original credit note which was issued, it has come back, so it has restored. Like First month the supplier reduced the liability, second month it got it added, so it is status quo. So for the supplier, technically nothing happened. Supplier is now issuing a fresh credit note, which the recipient has to accept it.
Okay.
Because the record cannot be edited more than once. First time rejected erroneously, I understand supplier can go back, open the record and submit it. The record comes back to the recipient again. If the recipient is rejecting second time also, then the system do not have a feature to change a record more than once.
Venu sir, what about this mismatch in liability declared in GSTR 1 and 3B? Suppose in January GSTR 1, supplier has issued the credit note, which
Yeah.
the recipient has rejected. It's automatically, the liability auto-populated automatically in GSTR 3B of the supplier in February.
Correct.
Okay. Now in March, suppose we amend that January credit note. Then here the January month GSTR 1 liability will be decreased, will reduce.
Right.
So again, I think the 3B and GSTR 1 will be mismatched here.
No, so if it is a genuine and I'm making the amendment, the moment it is added back into the 3B, you as a supplier, again, you will make a correction. Just because the liability got increased in the 3B, you still have a choice to correct your 3B. Your 3B is not logged yet. So you will correct back your 3B because you have resubmitted your R1, resubmitted the credit note. So you will reduce the liability to state your R1 should be equal to 3B at that point.
Okay. Okay.
Hello.
Thank you, sir.
Yeah.
Sir.
Yes, Subramani sir.
Sir, I'll tell you one instance like this. See, we issued an invoice. Yeah, after we came to know that is wrong, actually. We should not have issued that invoice. We raised one credit note for that. Both are with our customer. Customer, what has done? No, he has rejected both invoice as well as credit note.
Very good.
Now
Good
the
thing
issue
is
is that the credit note portion is sitting as a liability in my GSTR 3B. He says, no, I cannot accept this because invoices doesn't pertain to my this thing. I have not received any supply. So I have rejected both invoice as well as the credit note. How do we handle
what the recipient has done is a right action. You should not issue a credit note to the wrong invoice. Section 34 doesn't envisage this scenario. Let's say you are supposed to raise an invoice to Venugopal, but by mistake you have in the accountant and the drop down selected Rajesh Agarwal. The invoice has gone to Rajesh Agarwal. Do you realize the invoice has gone to Rajesh Agarwal? You are issuing a credit note to Rajesh Agarwal. No, that is not the right thing. Why should Rajesh Agarwal's document should get disturbed? When you think that you have issued a wrong invoice, you should cancel the invoice. If it is an e-invoice, within 24 hours, you cancel the invoice. If you think that you are unable to cancel the invoice, that's okay, no problem. Go back to your GSTR1 before you submit the GSTR1, delete that record. Why will you accept? Why will you disturb the receive some other person's GST returns? Now, I as a recipient, I have received an unknown invoice. I have received an unknown credit note. I neither want credit. I don't want a reduction in the credit. I have rejected both. The moment it is rejected both, like I said, if the original invoice is being rejected, it comes back to the supplier, but the liability of the supplier will not come down manually or will not come down automatically. Supplier has to manually change it. But if the credit note is rejected and coming back, the supplier liability is added automatically. In the current case, Subramania sir, you have to manually make corrections so that your R1 and 3B is matching.
Thank you.
Venu sir, one question please here.
Yes.
In case of e-invoice and the time limit of 24 hours has been left.
Yeah.
It is practically earlier we are doing also the same thing. To cancel that e-invoice, we are using that credit note. We are using the issuing the credit note, and while filing the GSTR1, we are not submitting both that credit note and invoice.
Okay.
But nowadays, then it will be so whether this is good practice or what to do.
I would say that you cancel your invoice in your system itself. And that is where in your table 13 of R1, you say there is one cancelled document, and you will, in your R1, you will not show that invoice. So the
Okay.
moment it is not, it's like this. Now, after coming of after IMS, even though there is a record in 2B, it will not come into 3B unless you accept that record. Yes or no?
Correct.
Likewise, even though you did an e-invoice, unless you file your R1, it doesn't go to your GST or 2B of the recipient. It
Correct.
doesn't go to IMS of the recipient. So what is eventually final is the supplier's R1. So in the R1, you delete that record. Now, of course, you may get a question saying that there is an e-invoice which is not there. You say that was an erroneously done and we have cancelled it in R1. We didn't even show it as a supply. So where is the question of recipient taking the credit and loss of revenue, right?
Correct.
So
Correct.
there would be a legal hassle to justify, but that is the right way to handle it.
Okay. Thank you, sir.
Yes, Jagadeesh, you may proceed.
Yes.
Excuse me, sir.
Yes, sir.
Yeah, sir, if the customer return the material, should the customer raise debit note at GST portal, or we being the supplier, we should raise the credit note at GST portal? This is because what is happening in the company, last year there are so many materials returned, so neither the customer raise the debit note GST portal, or these people supplier, they did not raise the credit note in the portal. Because of this, we lost that much of credit. Now, who has to actually do such? Actually, we being the supplier has to raise the credit note, right, in the portal.
Yeah. So from the accounting terminology, credit note, debit note is, if you are crediting a party, it is credit note. If you are debiting a party, it is a debit note. I am a buyer. So I purchased material from you. So I will be accounting the purchase invoice and giving a credit to you, so that I have to pay 100 rupees. Let's say 20 rupees worth I have returned to you. So I don't need to pay you. So I'll raise a debit note in my books. These are accounting terminologies. But when it comes to GST, credit note and debit note originates only from the supplier. No action is required from the buyer. If the supplier feels that his value of the supply is higher than what he originally declared, he will raise a debit note. If he feels the value of supply is lower than what he originally declared, then he will issue a credit note to reduce the value of supply. So in either case, it's a supplier's liability to take an action on this.
Okay. But what I'm telling, request, is there any notification available in the GST and such? Because in our company,
Section 34, it is very clear, sir.
Okay. Because then our company, they're going to the customer. No, you should have done the debit note because of you. You are lost that much of credit card. They're going and debating on it. But the customer is telling, no, you are being supplier. You should have raised the credit note. They're debating now.
Yeah. So you can always refer to section 34(1), which says the scenarios in which the credit note has to be issued, and it is to be issued by the supplier.
Fair enough, sir. Thank you very much, sir.
Yeah.
Venu sir, please, last question. As Jagadeesh has told, as and when we raise the e-invoice, in T+2 transaction, it will flow to the customer IMS also, recipient.
Correct.
Okay. Suppose that person has accepted that accepted that invoice. Okay. And later on, we are not showing that invoice in our GSTR1. So then what will be that pros and cons for that transaction?
Yeah. So again, very good point. I want everyone to make note of this. Just because a record is there in 2B, it will not be a credit to you unless you accept in IMS. Just because you have accepted in our IMS, it will not again go to 2B. Now, on 15th of March, let's say I have done the e-invoice to you. You have seen it in your IMS and you have accepted it. I am not filing my R1 till 11th April. I am filing my R1 after 11th April. Even though you have accepted in IMS, it is a record will be going to the 2B of the next month. Last scenario, I have raised the invoice, you have accepted it. Now, I may delete the invoice, I may cancel the invoice, I may change it. Anything that I may do even before my filing of R1, that means the IMS, whatever you have accepted, because I have changed the record, the status of it will be reset. It cannot further accept it because you accepted thinking something, but it got changed. So the record gets restored to the original nature as if you did not take any action. Yeah. So inside of that, it could be a record could have been deleted, could be increased, or could be decreased. That means you cannot be a silent saying that I have accepted the record in the IMS once. That means I don't need to accept, or why is it showing as not accepted state? Maybe the supplier would have opened the records, made some edit and closed it. That is why the saved status got deleted. Is that clear, sir?
Thank you, sir.
Yeah. Chetan Kumar is asking IMS to be mandatory for e-commerce retail industry with effect from. Sir, even I also don't know. So if you have anything specific, we will see. And any dates or everything is always going to change. But please know IMS is going to be permanent as of now.
Got it, sir. Thank you.
Yeah. So till now we have seen the value of the invoices. Now we'll see the impact if we change the nature of invoices. So as we have already discussed in the IMS workflow itself, that RCM invoices will not flow to the IMS. They will go directly go to the your 2B and sit there. So if any invoice which was initially reported as an RCM, but later it got changed to the amended as an forward charge invoice. So initially it's an RCM, later it became the forward charge invoice. In that case, it will reflect in your IMS. You have an option to accept it, reject it, pending it, the same way how we have discussed in the previous Excel. And also the similar way, if any RCM invoice which was amended to the forward charge credit note. In that case, if my recipient has accepted, then full this input tax credit will reduce to that amount. If we rejected that invoice, then obviously that rejected amount will become liability in the supplier's 3B for the subsequent month. Similarly, the vice versa case. Initially, it was an forward charge invoice. Later, it converted, it amended to the RCM invoice. We already know that in case of RCM invoice, that will not form part of your IMS. So as and when it is changed to the RCM, it will move out of your IMS. You cannot find that invoice in your IMS. So you cannot take any action on that. If we have taken any action, already you have taken any action on that. Just now Rajesh sir has asked that he has taken already the action on that, but now it got changed. In that case, what will happen? So the action you have taken on that will get reset automatically as and when it get amended. So in that case, there is no impact on the supplier part. And also the forward charge credit note to RCM credit note. In that case also, it will not, you cannot find it in your IMS after amending it to the RCM invoice. So this is about the amending the nature of the invoices. So hope it is clear. So what we have discussed till now, I will try to summarize in this slide. So in the IMS portal, you can take action on the multiple records at a time. Only in the online, if you have invoices less than 500, you can take action in the portal itself. As of now, you can download all the invoices which are reflecting in the IMS, but there is no facility to upload like a JSON, how we will do the GST one. That facility is not yet given. So on multiple records, you can take the action on a single time. You will have a multiple filters based on nature of invoice, invoice type, GST number, status, and the source, whether the invoice source or the manual. That based upon these multiple filter criteria, you can take the action at a single point of time. So we'll try to summarize this. If there is an in case of B2B invoice, there will have you have as a recipient, you will have an option of accept, reject, and pending, right? In case of upward amendment of invoice or a debit note, for this also you will have all the three options: accept, reject, and pending. In case of downward amendment, you will have only the accept, reject. You will not have any pending option, because you are, as a supplier, you are reducing your liability. Okay, so what your recipient is supposed to do, he also have to reduce his input tax credit, right? He cannot keep it pending. So that's the reason they have given only two options: accept it, reject it. If he accept it, okay, that loop will get closed. If he reject it, there will be a problem for the supplier, because he is reducing from 100 to 80. Okay, that 20 rupees, there is a loss to the revenue. That's the reason that 20 rupees will get added to the supplier liability. Similar to the credit note, this we already discussed that for the credit note, there will be two options: either accept it, reject it. You cannot keep it as pending. If my recipient rejected it, that liability on the credit note, whatever the amount is there on the credit note will go and add back to the liability of the supplier. In case of upward amendment, that 100 rupees credit note, I amended it to the 120, the upward amendment. In that case also, if my recipient is rejected it, it will be added to my liability as a supplier. And also downward amendment, in that case of the similar, in that case of the same thing. For RCM invoices, we have already discussed that it will not form part your IMS, and also 16.4 invoice that the place of supply invoice will not form part of IMS. If you carefully observe, in what all cases pending option is not there, in case if there is any loss to the revenue, only in those cases they have removed the pending option. Either the recipient has to accept it, reject it. Either in the credit note, what supplier is doing while issuing the credit note, he is reducing his liability. His recipient is also supposed to reduce the liability. But if we mark that record as in pending, there will be a loss to the revenue, because here the supplier is not paying the output tax liability, as well as the recipient is also not reducing his input tax credit. So there is a loss of revenue. The similar the case with the credit note upward amendment, and also the invoice downward amendment. So that's the reason they have not given pending option for all these cases. Hope it is clear. So okay, now this is how your now we'll see the interface, how the IMS looks like. Already most of the participants are already familiar with the IMS dashboard, because it's got implemented from 14 November 2024. Anyway, for the participants who have not familiar with the IMS dashboard, I'm just briefing you all. So this is how your IMS dashboard looks like. You can find it in the returns dashboard. So if you see here, the type of all the type of invoices, you can see here how many records got accepted, rejected, pending, and all the things you can see here. Just now I had said that you have multiple, the filters to act upon your records. So based upon these filters, you can take the action at a single point of time. So you can also select the individual record. You can, after taking the action, you have to save save all the records. Without that, it will not get saved. Just by clicking accept, reject, and pending, no action. You have to after taking the action on the records, you have to click on the save. Otherwise, your actions will not get saved. So if you want to reset the actions what you have taken on the invoices, you can click on all those invoices on what you want to be reset. You just click reset. You have to click on the invoices. Let's say I'm selecting all these 10 invoices. After selecting these invoices, this reset button will get highlighted. By clicking on that reset, all the actions what we have taken will get reset and will become that as a no action records. You all know that the no action means deemed accepted. Okay, that is this is all the flow of records. This we have already discussed. Anyway, we'll firstly take you through this. The all accepted and deemed accepted, rejected records will move out of my IMS. Only those records which are kept, which are marked as pending, only those invoices will lie in my IMS. So how long these invoices will lie in my IMS, the pending invoices, as long as they take action, subject to 16.4 time limit. That is the 30th November of the subsequent month. For the 24-25, time limit to take action on is 30th November 2025. Otherwise, these records will move out of my IMS after expiring this date. So this is what the flow draft GST to be. Why I'm saying that draft GST to be is because as long as you file your GST to be, your GST to be will get updated based upon your actions in the IMS. So that's the reason I'm calling it as a draft. So compute GST to be. So when GST to be will get generated on 14th, right? 14th of the subsequent month. So post generation of your GST to be, if you have taken any action on the IMS portal on the invoices, you have to click on compute GST to be. So then you will get the updated to be based upon your actions in the IMS. So the same, the updated to records in the updated to be will flow to my 3B. This is the compute 3 to be. It will be get highlighted only after generating your to be. That is after 14th of every month. This is the IMS. This is the supplier view. So you can see here of all the invoices issued by the supplier, how many, where if you click here, you can see how many invoices are accepted, rejected, and marked pending. If you, so this is how, now we'll see the some FAQs, sequential generation. Yes. Unless if you not file your 3B for the previous period, you cannot, 2B will not get generated for this period. Let's say you have not filed your GST 3B of Jan. When 2B of Jan has to be generated on 14th of Feb, right? But I'm filing my GST 2B on 15th of Feb. Okay. So after going to the IMS, I have to click on compute 2B, then only my 2B will get generated. This is how we have to generate 2B in case of previous period return got delayed. So this question asked by some participant, that reset of record by the supplier, if the saved record is edited before filing of GSTR1, the updated record will replace the original in IMS. That means I have already taken action on that invoice, but my supplier, after taking action on that, my supplier has edited it. So automatically, whatever action I have taken on that record will get reset. Again, I have to take the action on that. So as long as my supplier files the GSTR1, there is a chance of getting reset your actions. So deleting the record in IMS, if my supplier has deleted any record in the IMS, on that I have already taken action on that. In that case, either in that case, it will move out of your IMS. It will not, you cannot find that invoice in your IMS. So what are all the documents will not be available in the IMS, but will be form part of 2B. This also we discussed again for clarity. We'll discuss again this RCM records. It will go directly go to your GST 2B. it will not go through the IMS. The time barred ITC, that also we discussed, and ineligible ITC due to the place of supply rules, that is different place of supply. That example we discussed, that Karnataka and Maharashtra place of supply, and ISG documents like bill of entry. In case of bill of entry documents also, they will go directly to the GSTR to be and document flowing from GSTR 5, that is in case of a non-resident taxable person and GSTR 6 input service distributor, if you receive any input tax rate from these registrations type, in that case also these will go directly to my GSTR 2B. So document where ITC has to be reversed under Rule 37A, that is non-payment of tax by the supplier. This also we discussed. Are there any invoices or records where pending action is not allowed? This we discussed in detail with examples, so I am not covering this. So original and amended records in the same period. Supplier amends the original record in the same month. Let's say he has issued the invoice in the same month he has amended the invoice. Whatever the action you taken on the amended record will only prevail. So if you have taken any action on the original invoice, it will get reset. But before doing that, you have to take the action on the original invoice. That is, you have to accept it, reject it, then only you can take the action on the amended one. Now we'll see the another case that original invoice is issued in one period but amended in the subsequent period. In that case, in this case also, recipient has to take the action on the original record first. Either he has to accept it, reject it, but he should not put a mark that record as in pending. So file the 3B for that period, and subsequent month he can take the action on the amended record. So what happens if the recipient rejects the record? So before filing of the GST, let's split this into the two parts, before and after. First, we'll see the before filing of GST1. If the recipient rejects the record, so the supplier, what in this case, what he can do? Anyway, my supplier has not yet filed his GST return. I request my supplier to re-edit the document. As and when the document get re-edited, again it will reflect in my IMS portal. On that, I can take the action. If already my supplier has filed his GSTR1 return, in that case, what I can do? So I will ask my supplier to amend the document. If 3B have not filed, he can amend it by filing the GSTR 1 year. So amended record again will reflect in my IMS. I can take the action on that. The similar case, if you accidentally reject an invoice by mistake, again, I have to contact my supplier. I will ask him to reissue the invoice or edit the document. But again, that new invoice will appear in my IMS. So on that invoice, you can take the action. Okay. Now the 3B changes. There is a proposal that in future there is a locking of auto-populated values in the 3B. Anyway, now the whatever the figures that are populating in 3B, auto-populating in 3B are in case of liability, those figures are flowing from my GSTR1. In case of input tax credit, those figures are populating from GST2B, right? So later, once 3B hot lock, you cannot edit values in the 3B. If you want to edit the liability figure, you have to do it only from the GSTR1 by amending all that thing you can do. Whereas coming to the input tax credit part, if you want to change any figure in the input tax, you have to do it only from IMS. IMS only from IMS, the 2B will get changed. From 2B, your 3B figures, input tax rate figures will get changed. So very soon we may expect this 3B once the legal backing, once the amended provisions got effective, they will implement this hard locking of the GST 3B also. So hope I have. We'll take some questions on this, and then we'll move on to the next session, that year-end compliances. Okay, sir, would you like to add anything here, sir? Venu, sir?
Yeah, nothing. So
Yes.
in fact, someone was also asking, is IMS not mandatory till date? Rajesh was asking, it is as of now, it's not mandatory. But I would say that start using a software and get the data being reconciled. We get ready for hard locking of 3B. What I'm told is there's some tweaking happening in 3B so that all the edge case scenarios would be covered. When? I don't, right? But the intention is so that we all are geared up to be ready with it. That's all from my end on the IMS. Any questions to any one of you on the IMS? You can unmute yourself and ask, or you can put it in the chat before we go to the next part of the discussion. Any questions?
Venu sir,
Yes, sir.
in case of quarterly filer, this GST 2B is not auto-populated in the month of January and February. Okay.
Correct.
So, but the quarterly filers are liable to pay monthly tax.
Correct.
Okay. So, is there any problem here?
No. So the quarterly filers are making their own assumptions and computations of payment of the tax. So they know their output liability, they know the likely input tax credit, they are making that assumptions and making the payment. So that's how the system is also allowing them that, okay, in the IMS also it would continue. But honestly, in my personal view, I am not a big favor of quarterly returns. Anyhow, you have to open the system, pay the taxes for the purpose of your 3B has to be paid. So only R1 you are deferring. It is like nothing much is going to happen. When you have to pay taxes, better as well report your R1 and be with it.
No, sir, but as a consultant, we are 100% eager to file this monthly return. But
Right.
where the SSC is not willing, so they are filing this IFF one only on monthly basis.
Correct.
Pay taxes on monthly basis. Okay.
Yeah.
And second part, but 2B is not auto-populated. So
Correct.
another point is here whether January liability can be adjusted against whether January 25 liability can be adjusted against March 25 ITC
No.
in case of quarterly filer.
I get your point, but as of now, system only looking for interest, except in the case of GSTR 9, there is no provision legally in the law which is disowning the future ITC. For example, you have a liability to be paid now using DRC 03. You can pay that liability using the input tax credit which is accumulated as of today. You'll only be paying interest. So honestly, the answer is no, legal it is not bad, except for filing GSTR 9.
Thank you.
Yeah. All right. So with this, we have come to the first part of the session, which is on the IMS. And what is more important for me in today's session is this, which is on the monthly compliances that we are doing. Are we well within the track? Are we looking at now on 29th March? What are the things I should suggest my clients? Or I am a CFO, what is that I should tell the accountant to look at it? Or I'm an accountant, how do I correct whatever I have done? What is that I need to do? And books are getting closed. So I have already received information from my statutory auditors to get this thing. Is there anything that I need to be mindful from the GST aspect? To handle this part of the session, I now invite Ashika and Hitesh to take us through what are the compliances that we need to do for the year-end financial year 24-25, and also beginning 25-26, what is that I need to be keeping in the mind since 25-26 is starting? What are the things that I need to do? We would be looking both of that. Over to you, Hitesh and Ashika. And thank you, Jagadeesh.
Thank you, sir. So we'll be beginning with the second part of the session, which is pertaining to year-end compliances for financial year 24-25 from GST perspective. So first of all, I'll be sharing my screen. I hope my screen is visible to everyone.
Yeah.
Okay. So first of all, we will be discussing upon the various reconciliations which we need to perform from our end to close the books of accounts for the financial year 24-25. As we all know, it's been around 7 years into the GST regime, and every year we do perform these basic reconciliations. The first one being the outward reconciliation, the second one being the inward reconciliation, and the third one being the RCM reconciliation. We need to be very sure of the figures which we have reported in the monthly returns till as on today's date. If I talk about it, we must have filed the returns till February 2025. So we still have time to make all the corrections, all the adjustments, whatever is needed at our end, be it pertaining to the outward part, be it pertaining to the inward part, or any reverse charge liability which has been missed out in the monthly returns till February. Everything can be corrected and paid off and input claimed in the month of March itself. So moving towards, first let us discuss about the various outward reconciliations. The first one being the very basic, the reconciliation between GSTR 1, 3B and our books of accounts. One being the return where we furnish the invoice level details of our outward supply. 3B being the return where we furnish our outward supply and the eligible input tax credit, and thereby thereof we pay off the taxes which is being payable at our end. And the ones and the with we compare these with our books of accounts which we maintain throughout the year to so as to find the differences between the all three of them. The second important point is e-invoice reconciliation. As we are all aware that e-invoices has already been applicable to taxpayers having an aggregate annual turnover of more than 5 crores. It is applicable to each of them. So more than around 60 to 70% of the taxpayers in the urban areas would be covered under this e-invoicing provisions, and this needs to be adhered with uh, in order to reconcile it with the sales figure which we're reporting. The third one comes to the e-way bill reconciliation, and the fourth one is nowadays what the department has started doing is that based on the GSTR 7. Now GSTR 7, it is a return which we file to accept the TDS credits, the GST TDS credit which we receive from the various government departments if we supply any goods or services to them where the contract value exceeds 2,50,000. They are liable to deduct TDS under section 51 at the rate of 2%. And if such TDS credits come to our portal, we need to accept such credit by filing GSTR 7. Now, what the department has started doing is that they have started comparing the turnover as we report in GSTR 1, as we report in GSTR 7, and as we report in GSTR 3B. And if any mismatches occur, which might occur very validly because of some genuine reasons, they actually issue notices and create a fuss, even though the wrongdoing is on the department's end, but still the taxpayer face notices from the department and this end, and they have to comply with the notices to get their demands dropped off. If we talk about the reconciliation process, like we need to reconcile it at every stage, like step by step. If we start reconciling, we need to reconcile it head wise, rate wise, invoice wise, everything. Every reconciliation is needed because in case we have wrongly reported a B2B supply as a B2C supply, then our recipient will not be able to claim the eligible ITC which he ought to. Again, if we have reported some, if we have if we have generated a combined invoice whereby the products which we have sold, some are taxable and exempt, we need to be very sure that the taxable portion goes to either the B2B or the B2C column, depending upon the nature of the recipient, and the exempt supplies goes in the respective exempt supply column. Based on this, we need to perform a detailed reconciliation. If we look at the chart which we have prepared here, it's like books versus GST 1 versus 3B, the e-way bills and e-invoices. In case I am engaged in export business, I also need to reconcile the invoices which I am reporting as export of goods or services, export of goods along with the IceGate database. Now, for turnover reconciliation, we need to check again whether it is an intrastate or interstate. Interstate turnover, if any outward supply is being reportedly is wrongly reported, either means interstate supply has wrongly been reported as intrastate or the vice versa, the same can be corrected in the subsequent period return. Next, coming to rate-wise segregation, we need to be very sure of the rates of the products or services which we are dealing in, and we need to make sure that the rate which we are applying to our outward supply is appropriate, so that no underbill and no excess payment or short payment of taxes occur on our part. And in case we are having multiple GSTINs, we need to check it GSTIN wise and not on a consolidated basis, because at the time of filing annual returns, we need to file it GSTIN wise and not on PAN basis.
Now, if you will notice over here, this multi-dimensional reconciliation has been stated based on the number of notices we will issue. Like, it has been noticed, department is issuing us notice to stabilize whether the export turnover declared by us qualified as export. That's the reason Hitesh has covered in the slide about supply type wise. Then if you report exempt, you have to also show on what basis you are claiming it to be exempt, which is the relevant notification or entry number you have referred for claiming that exemption. Rate-wise is not only from the point that tax need to be discharged properly. Obviously, it need to be done, but now onwards, department has started one more comparison. So they are checking your GSTR 2A, they are checking your 2B, 2A, what the rate they are coming on an inward side, and they are trying to match with your outward rate, what is going out. This rate-wise also works for IDS refund also, because inverted duty is basically depend upon this rate, that your input rate should be higher than output rate. So that is one purpose. Second is if you are a trader. So in a case of a trader, your inward rate and outward rate, more or less, or should I say, it will be same only. So they are doing this rate verification also they have started to check if you are classified as your trader, whether the rate which is applicable on inward, accordingly you are paying on your outward or not. Now, interstate and intrastate, we also notice that there are cases where they are also started verifying POS, place of supply. You would have received a notice which is saying you to be a works contract service provider, and they are saying that you should charge CGST, SGST, not IGST. But if you will notice that notices are issued in a routine manner without verifying whether you belongs to that service category or goods category or not, you have to first check what the category of goods and service you are providing and on what basis allegation has been made. So this reconciliation which you are seeing over there and which he has explained how so much things need to be rectified, need to be reconciled, is on the basis that this all you need to take care to make sure you reduce your litigation cost. It is showing.
Now we cover the various scenarios which we have taken for easy understanding, which might occur when we perform our outward reconciliations. So coming to our first scenario, there might be a scenario where we have actually, recorded the sales correctly in our books of accounts, but we have either missed it to report it in our GSTR1 or GSTR 3B. Then what we can do is we can very well, since the March 25 window is still open, we can correct it in the monthly return, in the appropriate return. If you have not reported in GSTR1, you can report there, or you can report in, if you have not reported in 3B, you can report in such return. The second scenario is that tax has been correctly paid, means your books and 3B are matching. Yes.
Can you just go to the previous scenario?
Yes.
I just want to interrupt and everyone pay attention to this. In fact, the answer would be the same for all. Circular 26/26/2017 was a circular giving an effect to how do we make corrections. When we say corrections, the corrections could be upward and downward. That's all the scenarios which Hitesh is going to highlight. End of the day, the truth is books of accounts. That's what I'm presuming, that's your correct turnover. The same turnover should be in your R1 and also 3B. 3B more so for payment of tax purpose. Turnover in R1, 3B tax liability in 3B. When Hitesh was saying check for short reporting in R1 or 3B, it could be any, it could be totally either the turnover is not reported or excess reported or reported in a different section. 2 points you need to know is the March return you are filing in April, on 11th April for R1, 20th April for 3B. Both of this you include on a delta YTD basis. Whatever you are supposed to do April to March, what you have minus what you have already done April to February goes to your March return. This is an exercise, you should do it. You should have a good software which will do the reconciliation and tell you that these are the corrections that you need to do. And here is your corrected R1 or amendment record. I briefly touched in the earlier session also, GSTN provides amendment of record only once. You have wrongly reported an invoice, you can amend it once. When I say wrongly reported, GST number was wrong, invoice number was wrong, invoice value was wrong, or the tax rate chosen was wrong. Any of this could be wrong. If you are making a correction, you can make correction to it only once. Point number one. Point number two, when it comes to B2C, whole of the B2C can be corrected only once. Let's say March, in March you want to correct January return, January table 7. The table 7 is corrected in table 10. When you are correcting the Jan 3B, so not 3B, Jan GSTR1, you cannot correct Jan GSTR1 anytime after, let's say in April, May, June, July, August, in any of those returns, you cannot touch Jan 25 return again. So B2C, that month can be corrected only once. So even more careful you have to be. Another care for B2C is if you have filed a null, there's a difference between null and nil. Nil means it is zero value. Null means no value. You do not have any B2C sales. You do not have any B2C sales, but you can report it as zero and submit, or you don't even touch that section and submit. You forgot to report any value. See, GST portal will not permit you to make an edit if it is null. If it is nil, you can change the record. If it is null, you cannot change the record. This is another thing that you should always keep it in mind. So considering these points, Hitesh is giving us various scenarios. So please note these scenarios. Accordingly, you can advise your team.
Yeah, thank you, sir. So the first scenario which we had covered is either underreporting or short or excess reporting, whatever be the scenario, be it in 1 or 3B, wherever we have made the error, we can correct it in the March month return. The next scenario comes where we have covered a scenario where my books and 3B are matching, but I have not reported such kind of such sale in my GSTR1. So what I can do, I can report the correct sale figure in my GSTR1 based on the type of supply it is. If it is a B2B supply, I can put it in B2B. Or B2C supply, I can put it in the B2C column. Generally, these cases nowadays have reduced. The reason being, since the time ITC is getting matched with GSTR2B, if we miss out on any supply in our GSTR1, we definitely get a call from a recipient saying that he has not received the ITC corresponding to that particular invoice. So the probability of this error happening has got reduced to a very high extent. The next scenario which we have considered is where like books is equal to my R1, but we have not paid the taxes in our 3B. My R1 is more, but it is equivalent to my books, but my tax discharge in 3B is less than what I ought to have discharged as per my R1. Now, in these cases, we need to take utmost care, because with the invocation means with the arrival of 7512, it is a self-assessment. So if we have reported more sales in R1, then we should pay the taxes in 3B accordingly. If we say that we have made an error in R1, we need to correct the R1 to the extent we have paid the taxes. But if my R1 and books are correct and tax has genuinely been short paid, then we should immediately pay the taxes in a subsequent period 3B along with the additional interest. Now suppose all my R1, 3B and books, the total sale from April 24 to February 25, it is matching. But what the error has happened is that when I check it headwise, by headwise I mean when I check it supply type wise, like my B2B, B2C, export with pay, export without pay, SEZ with pay, SEZ without pay, exempted, then there comes a difference between these many supply types, like B2B has been overreported and B2C has been underreported, or the vice versa. So in that such cases, we can make the amendment in the March month return wherever we need to do that, and we can place the figures appropriately in the appropriate supply type, so that in future there is no such dispute pertaining to classification. Now, another important thing which we report in GSTR1, it basically it basically connects with the service industry, because we all know that any advance received for in case of goods, it is not taxable under GST. It has been exempted by notification number 66/2017. But in case of service industry, where you have received any advances, you ought to pay GST on such advances. So like when we report such advances in table number 11 of GSTR1, we need to report it appropriately. We need to also check whether the advances received which we have reported, and if the such advances have got adjusted in our books of accounts, whether we have reported such advances as adjusted in our GSTR1 or not. And if we have not reported any advance received or any advance adjusted during the year till date, then we ought to report it in our final March month return for the financial year 24-25. Now, next scenario which we have considered is like spillover effect. Like in the ITC part, we have a very common spillover effect is very common in the ITC part. When we come to outward reconciliation as well, the spillover effect may have an impact. Reason being, there might be a invoice which you actually did not report in your R1 of 23-24, but you reported in R1 of 24-25, and you disclose such invoice in table 10 of GSTR 9 for financial year 23-24. So where you actually disclose such effect in table 10 of last year, then when you reconcile your books versus R1 versus 3B for 24-25, you ought to get a difference pertaining to the amount which you had reported, which should be equivalent to the amount as you had reported in table 10, provided all other things you have reported appropriately. So if any reporting has been done in table 10 and table 11, the effect of which has actually been done in the monthly returns of 24-25, such figures will definitely be a reason for difference between books versus R1 versus 3B for 24-25. What we can do as a safeguard at our end, we can actually, keep the proper documentation with us, keep the actual copy of invoices and the copy of annual returns file, and as and when if the proper officer demands for explanation, we should provide them with the supporting documents, to litigate in the future. Now, another important correlation which needs to be done nowadays, because we have seen that the officers have started to reconcile the turnover as reported in your GSTR1 with the e-invoices generated, with the total turnover which are reporting e-invoice reconciliation, and all those things have started happening. So we should make sure that whatever B2B supplies we are making, all the supplies which you are making B2B, e-invoices for all such supplies have been generated. Now, since very recently the GSTN issued an advisory whereby they said that this compliance is getting stricter because taxpayers who are having an aggregate annual turnover of more than 10 crores, now they have to generate the e-invoice within 30 days. Earlier, this was only applicable to taxpayers who had an aggregate annual turnover of more than 100 crores. But now with the reduction of limit in this scenario, where the aggregate annual turnover of taxpayers having turnover of more than 10 crores, they need to generate the e-invoice within 30 days. I think the base of time limit e-invoice generation gets widened enough, and numerous number of taxpayers will come under this slab who need to comply with this provision of e-invoice generation a bit more strictly. Reason being, if not complied with, it would attract the penal consequences as mentioned in the provisions of the law. Now, some of the key areas where we actually miss out to report in the monthly returns, which we actually rectify in our annual returns. So one such transaction which we generally tend to miss out is the sale of fixed assets. Now, sale of fixed assets is not a normal day-to-day business transaction, and that is the sole reason I believe that these transactions are missed to be reported in the monthly returns. When the books are actually finalized and we have the audited books in hand, based on that, when we perform our annual return workings, we incorporate such sale of fixed asset and we pay GST on such sale belatedly. But in case the books of accounts are proper, the company has accounted a sale transaction in a judicious way, in a proper way, then we should definitely report it in the monthly returns only. While if we are reporting in the monthly returns, what are the safeguards we need to, what are the checkpoints we need to have? We need to check whether the same has been reported or not. If it has not been reported in monthly returns, if any sale has occurred between April to February of the current year, do report it in the March 25 return, so as to to curb on the interest liability which is accruing every month. Secondly, when we are reporting such sale in the monthly returns, we need to use the appropriate HSN code. Now, HSN code will also depend upon the based on turnover limit. It is advisable if we give 6-digit or 8-digit HSN code if it is available, and we should report it in an appropriate manner. Now, where to report? It will again depend whether it is a B2B transaction or a B2C transaction. Based on that, the appropriate tables are there in GSTR1. You can use any of those tables. Second comes the motor vehicle sale. Now, motor vehicle sale, we all know that tax is payable only on the margin money component of the motor vehicle sale. Earlier, there was a notification 8/2018 which actually prescribed the rates wherever the motor vehicle sale used to take place. two rates were prescribed, 12% and 18%, but very recently the CBIC has, uniformed the rate. The rate has changed to 18%, including the EVs as well. So we need to be very sure when that rate has been changed. It has been changed from January 2025, and uniform rate of 18% has been prescribed for sale of old vehicles. Now this rate will be applied to only the margin money, that has remained same. But earlier when 12% rate was also there, like when we used to sell a scooty or a motorbike, say, where the engine capacity was below the specified limit as given in that notification 8/2018, then we used to use the tax rate of 12%. But post January 2025, if any sale is occurring of any used motor vehicle, including the EVs, then we need to apply a rate of 18%, which has been now uniform. So this is a very important checkpoint. We need to take as a note of it. And if the tax has been, means the date of sale becomes relevant for this year, because rate has been changed after a certain date. So based, if the sale has taken place, say in the first part of the year, like from April to December, then the rate still goes to be 12%. But since there is an amendment in this rate change, we need to have proper supporting documentary evidence, because later on the proper officer might come and ask to prove and substantiate why you have charged lower rate although the rate was changed. Another important thing which we need to note here is when there is a sale of asset, be it plant or machinery, we need to, the ITC availment, we need to cross check with the provisions of 18 subsection 6, whereby, useful life of 60 months is uh, given, prescribed there, and the sale value which we consider, that will be higher of the two values as prescribed in the rules, higher of the two values by reducing by 5 percentage points for every quarter, or the actual transaction value, whichever is higher, you need to go it by that one. So with regard to sale of fixed assets, these are the major things which we need to check, which we need to report in our monthly returns if not reported yet, and we still have the window open for the March 25 return. Moving forward.
Yeah, one moment on the fixed assets thing. This is one area people generally doesn't pay attention, because most of the activities in the fixed assets are taken care by the admin department. So the admin department would have discarded the asset. Now, it would have been sold as scrap, and in a lump sum value, it would have been considered and sold. Could be computers, old furniture, could be anything. I'm not talking about motor vehicle. Now, this is generally accounted after the stat audit or interim auditor computed the profit or loss on sale of asset, etc. However, GST is applicable on the gross value. So two things, as Hitesh said, you need to check. One is you look at the full transaction value and account for the GST liability. And if you read the section 18.6, which clearly says the value to be paid is value as per section 15 or unutilized ITC, whichever is higher. Now, while reporting in your GSTR1, the way you would do, let's say the disposed value is 10,000 rupees and 18% GST 1,800. But however, the ITC that you are on account of ITC reversal, you may end up paying 6,000 rupees. In GSTR1, you would still choose 10,000 and the 18% column, but you will change the tax which is auto-populated as 900 to 3,000 to match the tax liability. This is another thing that you need to take care of it. Please continue.
Yeah.
Hitesh, it's 4:50. Just a reminder of time.
Yeah, okay, sir. Yeah. Next, when we come to the outward supply reconciliation, we need to check the credits in the expenditure side. Generally, what happens, some reimbursements like the loading, unloading charges and all those things which we generally debit to a profit and loss. Sometimes we also get reimbursement from our customers pertaining to that. So all those things also attract GST. We need to be very sure of the credits in the debit side of the profit and loss account and decide judiciously whether GST will be applicable on the same. Next comes the cross-charge transactions. Whenever there is a multiple GST and means a company has multiple GST registrations throughout the country and the head office is providing admin or the other services to various branches, we need to check whether cross-charge will be applicable to those transactions or not. And if the cross-charge is applicable, we need to do that cross-charge and report it in our monthly returns. The next comes the indirect incomes or the personal income scrutiny. This happens mainly in case of proprietorship concerns which are subject to tax audits. So when suppose a individual who is having a business, he also has a commercial property. So when we audit the books of accounts of the business, such rental income might not form part of the profit and loss account of the business. The rental income will be shown in his personal income under the head house property there. So, but even though such rental income is not a part of the business turnover here, we have to show that rental income in our GST turnover and we need to pay GST on that. So if such is the case and you have not paid discharge the GST liability on the rental income till date from April to February, in the month of March you can very well do. Now next comes where we have sent some goods for either through job work or for job work or for on approval basis. But when we send goods for approval basis, what we do, we don't raise an invoice. If the approval basis, if we get the approval within 6 months from the date of sending, then we raise the invoice. But if no approval is received, we consider it to be deemed sale. So such transactions also need to be reported. When it comes to export, we need to check that when we have executed the LUT, the export of goods, when the export of goods must take place within 90 days, within the date we raise the invoice. And we also need to check whether the export proceeds are being realized from time to time. When it comes to job work, we need to check when we are sending the goods for job work, be it inputs or capital goods, if such goods are returned back within 1 year or 3 years. If it is not received within 1 year and 3 years respectively, then we need to make another compliance, additional compliance in this pertaining to the e-way bill, that when we are sending goods for job work, when the principal and the agent are in two different states, then irrespective of the consignment value, the e-way bill needs to be generated in this case. Because if we don't generate the e-way bill, then it is a lacuna on the part of e-way bill compliance at our end, and we need to make sure that we generate the e-way bill when we are sending any goods for job work, irrespective of the consignment value, when the principal and agent are in two different states. Now, e-commerce reporting. E-commerce reporting, we need to report the sales made through the e-commerce in appropriate columns. It's not like we need to table 14 of GSTR1, which it is giving us. It is just a disclosure table. The normal sales the sales which we made through the e-commerce operators, be it B2C sale or B2B sale, we need to report in that particular column only, in the B2B column or in the B2C column only. Table 14 is just a disclosure table, and if you disclose anything in table 14, it does not add up on the liability of your liability of reporting in GSTR1. Similarly, in 3.1 of GSTR 3B and in 3.1.1 of GSTR 3B, we need to report the figures in the appropriate columns. In 3.1 of GSTR 3B, we are not reporting the sales which were made through e-commerce operators under 9.5. 3.1.1, we are reporting the sales which we are doing through e-commerce operators as specified under section 9 subsection 5 of GST Act. GST Act. Now coming to TDS credits. As I was saying earlier, the department has started issuing notices in huge numbers based on comparison being made in GSTR 1, 3B and GSTR 7. I have considered here two scenarios. Suppose your invoice pertains to the same financial year 24-25 and you have also filed your GSTR 7 for with respect to that invoice, the TDS credit means was reflecting in your GST portal, and you accepted such credit and filed your GSTR 7 as well. So we need to make sure that whatever credit we are accepting, corresponding to that credit, we have reported the outward sale invoice in our GSTR 1, and we have also discharged the GST liability in GSTR 3B for that corresponding credit which we have accepted in our GSTR 7. Now, if the matter pertains to a same year, then it is quite okay. Now, but there will be cases like it is practically we are seeing cases where like invoices we have already reported in the previous year, GSTR 1 and 3B of the previous year of 23-24 only. But department is making us payment with respect to such invoices at the current date in 24-25, and the date on which they are making the payment, they are giving us the TDS credit in our account, in our GST. So what we are doing, we are accepting a GST TDS credit pertaining to an invoice of 23-24 in the year 24-25. Now this is where there will be a gap between your turnover as reported in GSTR 1 and turnover as computed by the tax officers based on the TDS credits which we are accepting in your GSTR 7. So here what is advisable is like you need to keep a one-to-one mapping, invoice-wise mapping of which credit you are accepting when, and you need to prepare a detailed reconciliation, because in future it is bound to happen that these notices will go on increasing, and you will have to be document wise you will have to be very strong enough with a backing of TDS credit acceptance reporting in 1 and 3B to avoid any interest penalty in the future which the department might impose. Moving forward, now what should be my tax payable for the financial year 24-25? It should be like whatever outward supplies I am reporting in the GSTR 1 of 24-25 plus the spillover effect of table 10 of last year, and adding the spillover effect of table 10 of last year and deducting the spillover effect of table 11 of last year. Table 11 of GSTR 9. Table 10 and table 11 of GSTR 9, the spillover effect we have to consider. That will give me the figure of my liability for 24-25. This pertains to the outward part. What else do I need to pay? Inward supplies which are liable to reverse charge, which we report in table 4 of GSTR 9. That also adds up to my output liability, and the total tax payable comes to outward liability plus inward supplies liable to reverse charge. Another thing to be noted, make sure all the reverse charge tax payments you need to make it through electronic cash ledger only. Now coming to the inward reconciliation. Again, in the inward reconciliation, we need to now with the coming of section 16 to subclause AA with effect from 1st January 2022, 2B has become of utmost importance. So we can, if we are claiming any input which is not reflecting in 2B, we are claiming it at our own risk, because now we cannot go and fight with the department that even though it is not in 2B, but still I am eligible because a condition has been brought in the law itself. So again, as we did books versus 1 versus 3B in outward part, we need to do books versus 2B versus 3B in our inward part. The ECRS. Now ECRS, why I have segregated this into two is like, because ECRS, that if you go and check the GST portal, there are two types of ECRS given. First is the electronic credit ledger and reversal statement, and the second one is RCM liability or the ITC statement, which was implemented few days back in August 2024. GST and advisory came in whereby they actually asked us to that we can actually report opening balances pertaining to RCM ITC. Now the sole purpose of that was to enable us to to give us a good idea of how much RCM liability we have paid and how much RCM ITC we have claimed. So they had asked us for monthly filers to reconcile all the RCM liability which we have paid till date with the RCM input which we have claimed till date. And if it comes that your liability is excess, your liability paid is more than the input claimed, then you can report positive figure in the opening balance, or if the case is vice versa, which means your input RCM input claimed is more than the RCM liability paid, then you should put a negative figure in the opening balance tab. Such figures could have been put till 31st October and amended till 30th November. 3 amendments were allowed. And the fourth one, reconciliation, which in my opinion is again an important reconciliation, keeping in mind the arrival of IMS dashboard, the IMS pending reconciliation, which we need to do. Now let's discuss upon each of this in a detailed way. I have again considered some scenarios in this slide where I will be saying that ITC claimed in 3B is more than ITC in GSTR 2B. If that is the case, and we have found out that this invoice has actually not come in our 2B yet, and the supplier is not filing his GSTR 1, in order to avoid litigation, it is suggested that we should reverse whatever excess we have claimed in the March month return so that 3B and 2B gets matched. Now suppose any ineligible ITC, we have found that while doing the ITC reconciliation, we found that any ineligible ITC we have claimed. Suppose ITC pertaining to repair of scooty or ITC pertaining to food and beverages, which is blocked under section 17 subsection 5, we have claimed ITC on such expenses. So what is advisable is you reverse the same in table 4B1 of GSTR 3B. Now ITC reversal as per rule 37. Rule 37 is what? When we do not pay to our creditors within 180 days, we need to reverse the ITC and we can again reclaim when we pay off the creditors. So what is advisable in this case? If any creditor which has not paid and a creditor aging report shows that the creditor's dues is outstanding for more than 180 days, then what we should do? We should reverse the ITC temporarily in the table 4B2 of GSTR 3B. What will happen in this case? This ITC gets parked in my ECRS statement in the GST portal, and I can definitely reclaim that as and when I pay the outstanding dues to my creditor. Now we also find cases like where ITC has been claimed on the basis of 2B, but it has not been accounted in the books of accounts. So what should be our course of action in this case? First, we need to check whether the ITC which we have claimed on the basis of 2B actually pertains to my company or to my organization. If yes, then whether it is an eligible ITC. If yes, then I should account for the expense in my books of accounts and reconcile my books with 2B and 3B. In case I find that this ITC which I have claimed as per 2B does not at all belong to me, then what should I do? I should reverse it in 4B1 of March return. Finally, when we come to capital assets, we need to check whether the ITC which we are claiming on capital assets, whether it is in compliance with the provisions as stated in section 16 subsection 3 of the CGST Act, which means like if I am buying an air conditioner for 1 lakh rupees and the GST on that is 28,000, then I must capitalize it in the books of accounts only to the extent of 1 lakh. I cannot claim the ITC and I cannot capitalize it on 1.28 lakhs and then claim depreciation under 32 of Income Tax Act correspondingly. Both are not allowed. That check should also be taken care of. Now, when we come to Rule 37A, this rule was actually brought in so as to enable the taxpayers that we need to find a solution to, for those parties who actually file their GSTR 1, but they don't file their GSTR 3B. So nowadays what is happening is like 2A gives us the detail who are the 3B non-filers. So what I would suggest, from April to February, you download your GSTR 2A from the GST portal or any other software which you are actually using for reconciliation purpose. And there, if you get the data of who all are the 3B non-filers, based on that, if you check whether you have claimed the ITC pertaining to those invoices who are actually 3B non-filers, what can be done as per Rule 37A? You can actually reverse the same ITC claimed in 4B2 and park it in your ECRS. And once the non-filers file their 3B, you can again reclaim it. And then, as by following this procedure, you will be complying with the provisions of the law. Even if notice is served to you for claiming ITC of non-filers, you can definitely defend by saying that we have complied with the rules as prescribed and we are not liable to any interest and penalty.
Just can you go back to the earlier slide once on the Rule 37A?
Yes, sir.
See, again, I would request participants, when you use software tools, today the software tools are capable enough of giving you the information. Let's say the invoice is in R1, it came to your IMS, you have accepted it, it went to 2B, then it went to 3B, and you have availed the credit. All are doing good and it's a happy path. Now, it's also required for them to do filing of 3B. So the tools will always check, yes, R1 is filed, but 3B is not filed. In the month of March, you can raise a query for all the purchases that you have made. Does the vendors have filed the 3B or not? You give it to your IT vendor, he will execute a command, give you that report. Now you can focus on, now it's like nothing, there is no action specifically you have to do in March for it, because the time to reversal is after September. They have time till file till September. So between September to November, you will reverse. Thankfully, there is no interest obligation on you, but you need to know this. So you can give this after you file your March return. I want to know the status of the credits that I have taken, whether the vendors have filed 3B or not. This is another exercise that you need to put it in your to-do checklist. Please continue.
Yeah. Now, ECRS RECO. This ECRS reconciliation, this ECRS which I am talking about is of the forward charge reconciliation. The portal actually does it itself as well. But what I suggest is, like, for every ECRS transaction which you are parking, which you are reclaiming, you should have an invoice level detail in your Excel, so that in future when you reconcile your books with the portal, you will be having the very specific reasons for which invoice you have actually claimed, which invoice you have reversed, which invoice you have reclaimed, and which all are the invoices which are pending to be reclaimed, and that should match with your ECRS balance as on 31/3/2025. So once you, although the portal is maintaining, but the portal is maintaining it on an accumulated basis. It is not maintaining transaction wise. The transaction wise details is very important, so as to know which transaction you have already reclaimed and which transactions you have not reclaimed as on the closing of the year. Now what happens is that we actually, we erroneously file the returns by placing the figures in the inappropriate columns. Some of the scenarios I have taken where there is a likelihood that ECRS balances as reflecting in the portal might be wrong. Why? First scenario, I have considered that there was some ITC which was ineligible, which you ought to have reversed in 4B1, but you have reversed it in 4B2. So now what is the corrective action which you can take in your March return, March 25 GSTR 3B? You can reclaim the same in your March 25 GSTR 3B. That means you will add in your 4A5. You will disclose the same in 4D1. As soon as you disclose it in 4D1, you are nullifying the effect of ECRS and you reverse it in 4B1. So as soon as you do this step, your mistake gets rectified in this scenario. The second scenario which I have considered, ITC reversed in table 4B2 and reclaimed by reporting in 4D1 and now found that the same is ineligible. Although you have reversed, you have again reclaimed it, but now you are realizing that this ITC was ineligible. So what you need to do? No 4B2, 4D1 in this case. You just need to reverse the same in 4B1. Neither you need to add any value to 4A5, nor you need to disclose it in 4D1. You just need to do 4B1 in this case, nothing else. Another error which we often tend to do is like we actually reclaim the ITC, but we forget to disclose the same in table 4D1 of GSTR 3B. As a result, our ECRS balance remains inflated in the GST portal. So in case you have found that from April to February, you have reclaimed some ITC, but you have not disclosed it in 4D1. In the March month, you can just put 4D1 figures there. Just make sure that your 4D1 figures are less than 4A5 and then your mistake will get rectified.
Anyone have any question in understanding 4D1 reversals, reclaim? Because this is very important. You might have reported in 4B1 as 4B2 and something as 4B2 which couldn't be there. So if you are in any of those situations, you can ask your question, but I'm sure you got a fair idea. Like how you are doing a reconciliation of your credit that you avail. Credit that you will also to avail is also your credit. During your audit under section 65, the proper officer is not just going to ask you a question on the credit that you have availed. Please note the proper officer is also going to ask a question that the credit you have parked under 4B2 as a temporary reversal, because this is available to avail on a future date. Imagine a case where of safari retreat, similar to that, you have availed and the act now overturned. So in the year in which, because the 4B2 credit can be carried forward even 10 years also. After 10 years, you can go and utilize the credit. No one is going to stop you. Like say rule 37A or rule 37, you have not paid the vendor, you are paying it late. All this would be taken care at a later date. Yeah.
Yeah, thank you. Now, with regard to IMS pending RECO, now why I am focusing on IMS pending RECO is because why we keep the invoices at the pending stage in IMS. The one basic reason could be that we have not received the goods or services yet, or we have not, got the copy of tax invoice. We have not got the copy of tax invoice. So here what we can do is like if any invoice is pending in IMS, we should follow up with the client and claim before March 25 3B. If any invoice which we have kept pending and it has been wrongly uploaded, then you have two options. Either you can communicate to the supplier to amend it or reject it. And debit note, see, credit note cannot be kept pending, but debit note can certainly be kept pending in IMS. Now, debit note, when a debit note is issued, when there is a difference in the value which was originally billed. The original bill value is 1 lakh and now the final value is 10,000. So 10,000 debit note you have received. Now, pertaining to debt, if such debit note is disputed, then you can definitely keep it pending. If it is undisputed, you can accept it in this month's return and claim the ITC. And if such debit note does not belong to you, you can again inform the party who has issued the debit note, and or else you can reject such debit note in your IMS. Now coming to the reverse charge reconciliations. As I earlier stated, a reverse charge ECRS has also come to the GST portal. So we need to check the RCM liability. We need to make sure that our RCM which we are discharging, we need to pay it. The payment which we have done is covering fully the RCM reflecting in our GSTR 2B. Also, we need to take care that whenever there is an unregistered inward supply, whether RCM is applicable on that or not. Another important point which I need to highlight here, it is like self-invoicing within 30 days of receipt of goods, supply of goods or services. Very recently, the rule 47A has been brought in, whereby it is saying that within 30 days you have to generate the self-invoice, or else you are not eligible for credit. Last year only one circular came where it actually allowed to, generate the self invoices at a later date, and it did not consider it time barred because the self invoices were generated at a later date. But as of today, if you ask me, benefit of such circular cannot be taken because rule 47A has been brought in, whereby any self invoice which you need to generate for claiming RCM input tax credit, it needs to be done within 30 days. These are the expenses where RCM is applicable. I'll just focus on renting of immovable property. Now, renting of immovable property, back in July 22, they actually brought in residential dwelling into the scope of RCM. Recently, from October 24, they have also brought in the commercial property which we are renting from unregistered person, and if we are registered, we are liable to pay RCM on such commercial property. So, if in case we have the taxpayers have not discharged RCM on such rental expenses, we make them discharge in the month of May. These are the other health check compliances which we need to do based on principal place, additional place. If any director change, you need to update contact number. This is important because if you don't have the proper contact details on a GST portal, you will be missing upon the notices or the messages which is being coming from the GST department. If the branches is in different state, then you have to take a new registration because turnover is PAN based, not GSTN based. And another one, ISG, since it is getting implemented mandatory from 1st April, if you are having multiple registrations throughout the state, you need to take a separate ISG registration. Coming to the point of action for next year, we need to furnish or LUT for export of people who are engaged in business of export and making supplies to SEZ units. They need to furnish LUT for 25-26. People who are opting to opt for composition scheme, they need to file CMP 02 on or before 31st March. CMP 04 needs to be filed by 30th April 2025. The amnesty scheme, which is very widely been talked about, if you are to avail the benefit of amnesty scheme, then make sure you pay the taxes in full for the first financial year as demanded either in the notice, order or statement as the case may be by 31st March 25. The e-invoice of e-invoicing part that I earlier covered as well, it has been for taxpayers having aggregate annual turnover of exceeding 10 crores, you need to generate it within 30 days. Now, taxpayers having turnover less than 5 crore can opt for QRMP scheme on or before 30th April for the next year. ITC 04, the job work related form. If your turnover is up to 5 crore, you need to file it on an annual basis by 25th April. And if your turnover is more than 5 crore, for the half year period from October 24 to March 25, you need to again file it by 25th April. The GTAs who are opting for forward charge, they need to give a declaration by 31st March. And another important change pertaining to the specified premises, which very recently the CBIC brought in through the notification number 5/2025. This I'll take a minute in detail. The definition of specified premises has actually been changed. It has stated that value of accommodation services supplied which is greater than 7,500 per day in previous financial year, then you are automatically a specific premises and you are eligible to claim ITC. If you are voluntarily declaring your premises as specified, then what you have to do, the procedure they have prescribed, you have to file an Annexure 7, which they have given in the notification itself, and you will be eligible to claim ITC. If you are a new applicant, new registration applicant, then you have to file Annexure 8 and that must be filed within 15 days of REG 02. REG 02 is the acknowledgement which you receive when you submit REG 01 for registration purpose. For already registered taxpayer who want to declare themselves as specified premises, you need to file this declaration between January 1st to March 31st of the preceding financial year. Again, additionally, they have also given an option that you can opt out of the specified premises by filing a declaration in Annex 9, and such declaration also needs to be filed between January 1st to March 31st of the preceding financial year. And once you opt out, then you come under the 5% slab rate and you will not be eligible for any ITC. If you have any questions and answers, you can put in the chat box. I think we are running out of time. The text session also needs to start. That's it from my end.
There is no text session today, Hitesh. Don't worry.
Okay. Okay.
Yeah. So one point which I would like to bring attention of everyone. By the way, just go to the last slide. Last slide. Yeah. So the LUT that needs to be obtained for 25-26, which Hitesh has mentioned, just check for 24-25 also. In case if you have not done, please do that. This issue may come up 4 years later that you made an export, you don't have an LUT, you did without payment of tax. So you should have done with payment of tax. Please pay the tax now. It may come up then. So this is a hassle. Just make sure you check that. And amnesty benefit 128A is coming to end on March 25. Make sure that you do it. Ashika, do you want to add anything on the amnesty point of view?
So recently they have issued a circular. So for amnesty, 2 points they have bring out. Now, as we were aware, if when we are applying for amnesty, we have to pay whole amount of tax within 31st March 2025. So the thing was, there may be a situation where we have been issued a consolidated show cause notice or a order, which is even cover the period which is outside the amnesty scheme. As amnesty is for first 3 years, I am talking about waiver of interest and penalty. So 17, 18, 18, 19, 19, 20 is under amnesty. It may be a case, an order has been issued which cover also 2021, 4 years together under one order. Now, previously they said when I am applying for amnesty, I have to pay whole amount of tax with interest and penalty for the period which is outside the amnesty scheme in order to be eligible for amnesty. Now they have clarified that period which is outside the scheme, I am not required to pay tax, interest or penalty. Accordingly, they have also made changes in the rule. So therefore, only amnesty will cover only the period which is under the amnesty. Period which is outside the amnesty will be dealt by the officer based on the explanation or submission made by you. So it will be like proper adjudication proceeding or appeal proceeding will be followed, which is the period outside the amnesty, which is a welcome step one. Second, another query which has been raised is, amnesty says any payment which is done before 31st March 2025 would be considered as a payment made. But there may be a case payment instead of making through DRC 03, it has been made through GSTR 3B. Now they have clarified even the payment which has been made through GSTR 3B will also be considered. But that comes with a condition. They are saying the payment which is made in 3B will be considered only and when it is made before this introduction of section 128A. That is, if the payment is made through GSTR 3B prior to 1st November 2024, then they will consider even that payment in this amnesty scheme. But the question which now arises, how that payment will be considered? Because I may say I might have paid the tax in GSTR 3B against that order. But while making the payment, there is one financial year involved, like for suppose 24-25. For that financial year in 3B, I would have also made payment for my current liability. apart from the liability which is to be made for the order. The officer need to be very thorough. They will definitely going to verify whether the excess tax payment made apart from your current liability is enough to set off against your order or show cause notice against which you want to apply for amnesty. And another thing is the people which is having misconception that 31st March 2025 is the last date to apply. It's not a last date to apply for amnesty scheme. It is a last date to make the payment. So if you have made the payment by 31st March, you have a time till 30th June to apply for amnesty scheme. Now there may be some order or some proceeding still going, not over. So as per me, what you can do, you can make a payment through DRC03. And once you receive the order, you can do linking of that payment through DRC03A. In that way, if order comes in your favor, you can apply for refund. And if order comes again and you still want to apply for amnesty, you can link this DRC03 as this payment is before 31st March. They will definitely consider it and you can go ahead with the amnesty. This is all from my side for new development which has happened under amnesty.
Yeah, thank you, Ashika. And okay, so someone is saying that the WhatsApp community is full. Nevertheless, okay, we will, when we are sending you the copy of the presentation, we will check on this and we will revert to you. Hitesh, can you just put down the slide?
Yes, sir.
Can you stop
Shall I go?
presenting? Yeah, you just stop presenting that.
Okay.
All right. Yeah. Thank you. Okay. So a couple of points which I want everyone to make note of. In fact, someone was asking that what's about this new concept of the OTP business. Time and again, I would like to iterate this point is start incorporating using technology in your day-to-day activities. I would still wonder why would someone log into e-waybill portal using username password, do a second two-factor authentication OTP entry and enter the details of your delivery challan or the sales invoice and generate the e-waybill, update back that into this. I would agree this process when you're doing in say 2017, 18 or 18, 19 when you're new to it. Error is human. The chance of mistakes happening is definitely going to high. So try using softwares today. Every accounting software has this an API integration. Please do it. In case if you have any doubt in how to link it, you always reach it to us. I can see Ranjan and someone else asked this question, Rajesh. So this is two things I would definitely want you to suggest. That is point number one. Point number two, the amnesty, as Ashika rightly mentioned, it is the filing of the SPL 01 or 02 is by March, but you have to definitely make the payment of the taxes. Payment of taxes can be done using credit ledger or the cash ledger. Most of you would have paid the pre-deposit. There is a DRC 03 payment which is already there. The government has given a facility of 3A to adjust the liability which is showing up in the liability ledger against these demands. Against the demand only you have to offset. Mere having the balance in cash ledger is not equivalent to payment of tax against this demand order. This morning there was a CA who called and said, sir, I've deposited the cash. Does it mean that it is payment? It is not. Again, that would draw again legal battle to fight a case saying that the balance was there. So here is again, just check whether those liabilities have been offset or not. So we've answered all the questions and so bang within the time. So it's 5:30. If there are any questions that you would like to ask, we are free. We are here to answer your questions. You can put it in the chat or you can unmute yourself and ask the question.
Venu sir, the last question regarding this OTP requirement, I think there is no changes in this OTP requirement. No?
Sir, the GST has introduced two-factor authentication. That means mere username password is not sufficient to log into the portal and do it. You will use username, password, and again you will get a OTP. You will enter the OTP. Then the portal is open. After it is open, it is business as usual. You will not get OTP multiple times when you are doing the transactions. It's only at the time of login.
Okay, and this provision was already existence, na? This is not changes from with effect from 1st April 2025.
No. This all January. No, not even January. From 1st February, this was implemented. 1st Feb 25.
Okay, thank you.
Excuse me, sir.
Yes, Harira.
Yeah, sir. I this may be a silly question. If I'm wrong, please correct me.
Nothing is silly. Go ahead.
Now, let's for example, 100 rupees is the output tax liability. 80 rupees is the input credit. So the liability is 20 rupees. So that is what we are going to pay. In addition to that, there is a 10 rupees RCM. So 20 plus 10, it will become 30. So that RCM we are reporting in GST 3B. The same thing, it automatically gets reflected in input credit 10 again. So in such a case, should we pay 30 rupees or 20 rupees, sir?
All right. Okay. So let me put it this way. Your RCM has to be paid in cash.
Okay.
The moment you are making the RCM payment in cash, it is available to you as a credit.
Correct.
Right? Otherwise, you have a credit balance of 80.
Right.
Plus the RCM credit is available to you is 10.
90, correct.
90. And your liability, output liability is 100, RCM liability is 10. So your
Correct.
total liability is 110.
Correct. Yeah.
Input is 90.
So, yes.
So the amount that you need to pay in cash is 20.
But in reality, that RCM we are not paying separately. The RCM cash not going to the government, no, sir. They are showing 10 again, paying 10 here.
Yeah. So earlier we are taking this plea that RCM is a revenue neutral. I am paying the tax and taking the credit. Hence, there is no loss to the government even if I have not paid. But look at this way. 100 is your liability. You are saying 80 is your purchase. So 20 is what I have to pay. Now 80, when will it become your input tax credit? Only if and only if supplier has filed in R1, it has come to your IMS, you have accepted it, went to 2B, from there you have reported in 3B, only then it is your credit.
Everything 80 has come, sir. We'll assume that 80, everything it has come.
Yes. So you are now making an assumption this has come, hence you have 20 liability.
Correct.
What if it did not come?
To the extent of whatever is available to be.
Assuming you have only one purchase. I credit for 80, liability for 100. If that 80 credit is not there, what would have been your liability?
100.
100. Correct?
Correct.
The same argument is the department saying that I agree that RCM is a revenue neutral, but both are two different aspects. You have to pay liability and you have to take credit. Now, availment of credit is subject to 16.2. Here you will fulfill it, but 17.1, 17.2 and 17.5. Not necessary that every RCM credit you will get a full credit of it. So some portion may get reversed. And the RCM credit is also subject to 16 subsection 4. So the time limit within which you have to avail the credit. Hence, it is not the revenue neutral argument will not float in. So the whatever you have to pay is you pay. I don't care whether you will take the credit or not. If you have not taken the credit, you chose not to take the credit, but the liability will still the same. Hence, reporting of RCM and payment of taking of credit is an important step. You cannot consider it is revenue neutral. What if it is like 20 rupees I'm paying this way or that way, I have taken care, is again a legal battle which you may not win also.
Okay. But that means I am reporting 10 RCM liability in table 3. The same 10 RCM input cut I'm reporting in table 4. That become contra. Correct, no, sir?
Absolutely. You're right.
Okay, sir. Fair enough. Thank you, sir.
Yeah. Sir, one question, please. Hello.
This to you, this question. Yes, go ahead, sir.
Sir, there are certain ineligible credits like insurance expenses and staff welfare expenses. So things are, it is coming in 2B, which we are reversing it. Okay, after a few months, maybe 1 or 2 months, they will raise one credit note. Maybe that is relating to that earlier invoice or not, or for what reason it has raised. Okay, so can we reject in IMS?
Okay. Jagadeesh, I told you now this question is to you. So this question is to you. You can unmute yourself and answer.
Sir, come again, sir.
So
Sir,
it is
there
an
are
ineligible
ineligible
credit
credits, sir.
which was reported in 4B1. I have received a credit note for a 4B1 credit.
It's an ineligible credit, sir.
Yeah.
Original credit.
Actually,
I have
original
not
invoice
availed.
we have it was an ineligible credit and we have reversed it the concerned month itself. Okay, subsequently they have raised on credit note. We don't know for what it I mean whether it is pertinent to that particular invoice or not. I
Okay,
don't know what purpose they have raised.
the original invoice you have accepted and
No.
reversed it in the 4B1, right?
Exactly.
So now again, he is issuing the credit note now.
Yes, sir.
So in this case, you can reject that credit note.
Okay, let
Yes,
me
sir.
correct it.
Yes, sir.
I wouldn't say that you should reject the credit note, sir. You should not reject the credit note. You first need to check whether the credit belongs to you. Let's say the original invoice was 100 rupees, but after negotiation, it came down to 80 rupees. So that means 20 rupees is issuing the credit note. Please accept the credit note. You shouldn't reject it because that credit which you have to avail belongs to you. Now the accepted credit note flows to your 4A5 with a lower value. When an accepted credit note flows to 4A5 with a lower value, you got to manually restate your 4A5 back. That means since your original credit you have not availed, the reversal credit note also should go to 4B2. Please manually increase the value in your 4A5. Is that clear, sir?
Yes, sir. Yeah, clear, sir.
Yeah.
Yes.
But the only question which I have is I did not understand your question. I don't know why who said that someone has to reverse the staff welfare expense? I don't know. I don't know why you have to reverse the credit on insurance. Even that also I don't know. Now a pause indicates that you are thinking that why I am saying I don't know. I would want you to go back to 17 subsection 5. Merely something is given in staff welfare in your expenditure doesn't mean that it is 17 subsection 5. You may give some good facility to the staff.
Excuse me. There's something like health insurance for staff.
So it's not all insurance. It is only health and medical insurance.
Exactly, sir. Exactly.
Yeah.
And
So
some vehicle maintenance expenses, sir.
absolutely. I know, I get your point. See, why I am trying to correct you is we got this habit back in our mind. I'm sure you know that what you're talking about is the food given to the staff or the medical health. But
Yes,
when
sir.
you are saying, you said staff welfare and insurance.
Correct.
Okay. When we are in the legal world, when we are talking about the subject, we got to go by what is there. That's the reason I've corrected. Please don't get offended. Yeah. All right. Any other questions? Thank you so much. Firstly, special thanks to Stephen for coordinating and doing all of this work. Stephen would be sending the copy of presentation to you by way of a feedback mail. I want you to share your feedback, letting us know how the session went for you. Most importantly, you let us know what are the other topics that you are looking forward. Like every month when we do the session, we do consider the feedbacks that come, what are the topics you are looking forward. From April, we are commencing the tech sessions, and this time we are including little AI piece of it. All this while we've been looking at the sessions on how to use M language, pivots, Power BI, some scripts. We didn't touch upon macros, and we still feel that we will not touch macros. But we will now concentrate on how you automate your work solutions using AI as a medium, and I'm sure every one of you might be using either Gamma or Deep Search, DeepSeek, Gemini, or ChatGPT. Everyone would have some or the other account. We will start looking at how do we leverage these tools. That's number one. Second, in the GST sessions, we would also once in a while looking at bringing some of the practical aspects of how, because there were some sessions people want to know how do we do some aspects of it. Still, we would want to keep our GST session more on the theory subject wise, but we will bring out on the in the tech piece itself some portion of how to do on the GST aspects. These are the two things which would be considered from the April session onwards. Otherwise, any feedback you have, feel free to share with us. Thank you, Jagadeesh, Hitesh, Ashika for the session. And yes, Sri Hari Rao, you will be getting a recording of it. Stephen would be sharing the recording link of this also. Thank you, everyone, and have a great Ugadi. Wishing you all again a new year financially, and also our traditional New Year starts after Ugadi. So, wishing you all a happy festive season. Thank you and good day.